Hello, everyone. Welcome to the stream. Welcome to Sunday night. We'll start in a few minutes' time, just getting the sound set up. So welcome to everyone. It's great to be here with you all. And welcome Emily Trading and Ray. Let me know if you can hear me okay. Okay. So folks, I seem to be getting a bit of a glitch on the stream here, but I can see there are 26 people watching. So welcome to everyone. I've got a bit of a glitch on my other screen, so I can't really see what's going on. But no worries. Okay, there we go, up and running. Absolutely perfect. So welcome to everyone. And we've got about 5 minutes before we start, so I will just hang out with you, make sure everything's working. Good day from San Francisco. Nice to see you. Yo Levin. And Emily Trading. Nice to see you, of course. And Ray Wood. Also excited, mate. And welcome to today's session. Good day, Ole from Germany. Nice to see you, Ole. All right, do please let me know if the sound is coming through clearly, because I can't tell, but I think everything should be good. And whilst we wait for the next 5 minutes, you can get settled in, get your coffee, and get ready for the show. Sound is great. Thank you, Yo Levin. All right, so we're streaming in 4K today. Yesterday, or last Sunday, was in HD. I'm going with 4K now. So 55 people watching. Fantastic. Good to see everyone. Craig, lovely to see you. I'm really excited. 59, 61 people in the house. Fantastic. Yeah, nice to see you, Craig. And it's nice to see everyone here in my own stream. Again, as always, of course. I do enjoy my work over at Holler Prime as editor over there, just doing a contract with them. It's a really good company. I'm enjoying the work, but I do like being here with my own channel and my own friends and family, I suppose. I've got to know quite a lot of you quite well over the years, and it's good to see you. Yeah, it's good to see Ray, always. And Lucky G, nice to see you, mate. I see you every day as well, not just over here. Yeah. All right, folks, a couple of minutes left still. I'm going to start shrinking down to get ready, go towards the charts. So let's get that set up. There we go. I'm a bit smaller now. Just checking the various settings here. It's all good. I've got my Charlie Sheen shirt on today, which I purchased on the weekend. So I hope you like that. It's mercerized cotton. Very nice. Someone said a bit of a mixture between Charlie Sheen and Gavin Newsom. I like Charlie. That's it. So yeah, EGT, nice to see you. So folks, I'm going to get going fairly shortly. We may start a couple of minutes early, but once again, thank you for attending the stream. Is Bitcoin about to break? Well, we'll find out shortly, Ray. So it's great to have everyone here. And in order to support the channel, I'd really appreciate your like and subscribe. About 57% of people who watch this channel are not subscribed. And I guess if there are 100 people watching, as there are right now, 50 of you are not subscribed. So please subscribe to the channel. It really helps to boost the channel to the algorithms and encourages YouTube to put the video out so that more people watch it and the channel can grow and we can do a better job. So your support is really required and it really helps. Without you, this would be pointless, really, wouldn't it? There would be no watching, of course. So please support the channel with a like and subscribe. And you can do that right now before we start. And it's free, costs you nothing. It's the best way you can help us out. So welcome to everyone. All right, folks, I'm going to get going. And I think I'll just amble into it, but I'm going to switch across to a slightly better view of my charts. I don't know if that's better or this is better, but I think we'll stick with that for now. I'll just probably wait for 30 seconds so that we don't start early. before people come in. Otherwise, people complain about it, and we don't want any complaining. So yeah, Bitcoin's an interesting one, Ray. I'm watching that on the screen right behind me, and we're just under 113,700. I'm about to add some more long size to that, but we'll talk about Bitcoin shortly and go into some more detail. MSTR, of course, will be pumped up by the Bitcoin rally. We can't see what MSTR is doing tonight. Of course, it's pre-market's only opening tomorrow, but we'll find out soon enough ahead of the market open tomorrow. All right, folks, so let's get going. It is time. So I'm going to switch over. And finally, just to welcome those who've just come in, please like and subscribe. It really helps to support the channel and makes us feel better about the work we do. So I'd appreciate that. Now, I believe on just yesterday or today, Trump made a deal with China. We don't know what the deal is, and he's been speaking to Xi Jinping over the weekend. And apparently on Thursday, they're having a meeting and they've sorted out all the tariff issues. They've struck a big, beautiful deal and everything's fine. And I think that's what we're seeing on the Bitcoin market and the other altcoins and so on in the crypto market as that good news came through, and hopefully that tariff woe will be settled one way or the other during the week. It's going to be a big week. We may have the government coming back. We may get a flurry of data that we haven't received for the last couple of weeks. We got CPI data on Friday, or was it Friday? Can't remember now. Anyway, last week. Was it Friday or Wednesday? But the CPI came in relatively hot, really. 3%, expected 3.1, but 3% is not good. And cutting rates with markets at all-time highs and inflation sticky is a euphemism, I think. Inflation's pretty, what's a better word than sticky? Like cemented on with superglue type sticky. So interesting rate cuts coming up. Still expected to see 2 rate cuts this year. And what I think is that we're in an asset bubble. And as we broke out to new all-time highs on the S&P and the NASDAQ last week, as we saw Bitcoin holding its ground and gaining strength on the weekend, and as we saw gold and silver and other metals, not so much copper, pretty strong on copper, which is good news for the markets, but the precious metals coming down, including platinum as well. So are we seeing a flow out of some of the safe haven assets like the Swiss franc and some of the metals, and potentially even the US dollar and the Japanese yen simultaneously? I don't know how that'll work out, but then flowing into risk assets like crypto and the Mag 7 AI and Bitcoin mining type stocks. That's what I think is going to happen. And I think we saw the front runner of that over the weekend and last week, as we saw massive rallies on S&P and the NASDAQ. Bitcoin took a little time to catch up, but over this weekend, and particularly today, you'll see Bitcoin has caught a bit of a bid. So having said all of that, I think that's the overall scene, the overall playing field, or sort of the rules within which we are playing going forward into the rest of this year. My expectations are a continuation of this asset bubble, including the names that I mentioned: crypto, Mag 7 type stocks, chip names, the risk on type stocks. As we go towards the end of the year, I think we'll see those escalating dramatically further, including crypto, and perhaps a pullback temporarily, probably in gold and silver, looking for a gain in liquidity later on to re-rally into next year. I think all of this is coming to a head towards the end of the year, in the next, in this quarter, and it might even dribble into next year quite significantly. But at some stage, I think this asset bubble will pop, and we'll see dramatic, and this is not a popular view. I think we'll see a lot more upside on all of these things, and then a deflation, an inflationary bubble, where we see inflation continue to either be sticky or increase, and then a big drop down in asset prices and devaluation currencies. So I think that's going to affect things like gold and crypto, as I said, stocks. But I think we might also see an influence on softs and grains, other commodities like wheat and corn, sugar, all at very low prices, which may benefit from currency devaluation and asset, including temporary assets, I suppose, like commodities. Things like uranium are interesting, and lithium reaching up into massive all-time highs. Perhaps a bit of a pullback required there. And that's the overall picture. So folks, take this opportunity to please ask questions in this session, and ask me what you want to know. I'm happy to answer your questions, but we only have about an hour. So you'll have to answer your questions now, get them in early, and I'll answer them in sequence as we go through the rest of the session. So don't waste time. We've only got 56 minutes left. So put your questions up. I will return to them when we get to a later stage in the show. Good day, Gigawatt. Nice to see you. Always lovely to see you. And is Crude bearish? Well, I don't know about that. Mohit, we'll get to Crude. Sean, nice to see you. And Martin Wolfbauer, nice to see you. And your greetings extend to Emily Trading too. So thank you for that. Let's get into the charts, folks. And I'm going to start on the left-hand side as per normal. I'm going to tell you what I've got on each of the market sectors, what I'm focusing on, and what I think are opportunities for us to make some money. I don't really want to waste time faffing around with too much technical analysis and, you know, what's the RSI doing or the stochastic? Is it overbought or oversold? Those are all interesting topics, but they're not for today. I want to give you where I think my ideas of where I think we can make some money in this next 3 or maybe 4 months going forward into the end of the year and the next quarter. So let's look at currencies. Are there any opportunities here? As I said, I think that we may see the dollar getting a breakout out of this range. My feeling all along, and I'm just going to cover currencies very briefly, was that the dollar could reach the bottom of the megaphone and eventually bounce out of there back into the megaphone central range. We haven't reached the bottom, but we haven't sort of bounced out of here either. And we are still below Dixie Moab, the big breakdown level. And I think that level will continue to be problematic for the dollar in the future. I do think, however, there is a chance we may have to test the 200-day moving average. That's this purple line here, and the top of Dixie Moab before moving down. I'm not sure, but I think if we move into riskier assets, it could be that gold and silver and Bitcoin and risky stocks, tech stocks, might draw and sap some of the energy out of the dollar as they move away from safer assets like the dollar. Believe it or not, the dollar and the Swiss franc and the Japanese yen are considered safe havens for currency plays. But I think this might just have to give back some ground, and we might even see a dribble down to the bottom of this megaphone. At the same time, and you'll also notice that takes us towards the end of the year, and at the same time, if the dollar does drop down, which I think it might need to do in order to produce or help or assist this asset price inflation, that might be what happens. And we could also see the Japanese yen losing a bit of ground, as it is doing a little bit already. And that means we could see the dollar yen moving up. But it's a complex relationship between the US and Japan in terms of debt and bonds and currencies, Japan being the biggest holder of US debt. And so all of these three plays, actually the $4 index, Japanese index, dollar yen, three really, they all work together. I don't know what the outcome is going to be. And I don't really have any trades on there apart from a short on the dollar yen, which is not doing very well. It's not doing terribly badly, but it's not doing very well. I do have one other trade on currencies, and that's on the Australian dollar against the US dollar. And you'll have seen that many of these commodity countries, the currencies of those countries, have gained a bit of strength because of asset prices, assets in terms of commodities, particularly in metals, rare earth type minerals, precious metals, and platinum group metals, and other things like softs and grains, which are pretty low priced at the moment. And if those get a bid too, we might see further strength in the Aussie dollar. I do like this chart, just generally technically. I think we've got a falling wedge pattern with a spike low clear out through the bottom. Very, very cheap right down there. The Aussie normally likes to trade within the 0.65 to 0.75 region, and I think we could get back up there. We've got to get up through the trend line. We're trying, but not particularly well. Holding okay with a double bottom here at the 200-day moving average and bouncing out of there. We've got to see a break above this trend line and a retest from the top side in order to be convinced that this might move up further into the 0.7s. That's the Australian dollar. Nothing else on currencies. Now, let's go to the NASDAQ and the S&P and a couple of the other things. Someone just asked about MSTR. Please do interrupt me if you can't hear me or if my screen's gone weird or if you don't understand my language, I can't translate into your language, but I might try, depending on the language that you speak yourself. Now, NASDAQ has bounced up beautifully, actually across the board really here, including the Dow as well. I don't have that on here. NASDAQ's broken out of here, and I think just very simply, technically, without going into too much detail, we've got a blob, two blobs, one at the channel top and the top 200 period Bollinger Band there. That's around about 26.5. And then if I scoot along, I've got a favored blob, this green one, at about 27 to 27.5, all the way back up into this triangle. I think that could be the area and the time that we see the NASDAQ peak out and then drop off into early next year. And you'll notice, I'm not going to draw the line accurately, just directly there. You'll notice that that takes us to the end of the year, middle of December. It could go further, of course, into January. But at some point, I think we're going to have to see a big correction back down, at least to the channel bottom, back into the 23s and 24s. Some time to go before that all happens, though. And for now, I'm remaining long and strong, as some YouTubers like to say, on the NASDAQ and the S&P. You can see my two entry tranches there. You can pause the video, have a look at where those are if you want to, but they're roughly at 24.5 and 24.8, something like that. We're currently trading at 25.350. So pretty good profit on there, two tranches, not just one. Same with the S&P, moving up through its breakout level. And I've also got two positions on here, similar to the NASDAQ. And once again, I'm just aiming for the top 200 period Bollinger Band or the channel top, which is way above us. I think we could get to 7,000 in pretty short time. And if I look at this on the weekly chart and scrunch it in a bit, you can see that we've got loads of upside up into these Fibonacci extensions, starting with 7.1, 7.2, and 7.3, all the way up here near the top channel line and the top 200 period Bollinger Band here on the weekly chart. Let's go back to the day chart, and you'll see actually that looks like it's miles above us and impossible to reach. But, you know, look where we've come from. Just a few weeks ago, we were down at 4,800. We're now at 6,800. So could we get further up to 7,800? Yeah, pretty easily. That's not too far above us. So pretty bullish on the NASDAQ and the S&P, in line with the theme or my idea. I'm often wrong, so don't quote me on these. I mean, you're welcome to quote me on them. I'll stand by these until I'm proven wrong. But those are my ideas, in line with this idea that we might melt up generally across the board in what I think might be an inflationary bubble and not a deflationary sell-off like many people are expecting. So that's stocks. I'm going to quickly look at the other screen and see if everyone's happy. So I think everyone's happy. In a bubble, which is likely to continue. Yeah, I think we've just spoken about that towards the end of the year, EGT. Omkar, nice to see you, mate. Always lovely to see you. And NK Upal, views on natural gas. Yeah, we're going to get to that right now. All right, let's move along. Next thing we need to look at is gold and silver. I'm still short on gold and I'm still short on silver. You can see my red arrows indicating where I got in. I'm not short on copper anymore. I think copper might break out in line with the rest of the markets. Dr. Copper often moves up and alongside, or even sometimes predicts where the markets might be going. The fact that copper is holding really, hang on, wrong chart. The fact that copper is holding really well in comparison to, for example, gold and silver. We did sell at that arrow, got out some way ago, just around about break even. After not really moving down below the 20-period moving average. I was hoping for that. Maybe we'll still get that. I don't know. That would take us up to the 78.6% Fibonacci, the last chance Fib. Actually, above that, that's the 618. I think we might even get up all the way to the 786 at about $5.50 for copper. So yeah, anyway, no trades on that. We'll see how that goes. And I think gold is in danger of bouncing out of here. That's the 20-period moving average here on the day chart. It's the first and most important short-term support level, 20-period simple moving average here on the day chart. And we've formed a double bottom trying to bounce up. But we are still below the trend line, actually the second trend line. We've broken down through the first one and the second one. I do think that we could bounce up to 4,300, that's the 786 fib, or 4,230, that's the 618 fib. I do expect that actually, and I think because we've had this most massive rally up out of this big breakout triangle on gold, we were long, we got out and we're now short. But I think for a couple of things, looking at this chart, we've broken down through two trend lines. We're holding the 20-period moving average. This massive rally out of the big breakout triangle will have some institutional and potentially large retail traders trapped here at the top because of the speed, the rapidity, and the violence of the sell-off once we form that triple top. Very powerful triple top here on the day chart. Very powerful move down, probably trapping a bunch of people up there. Not a lot of time to get out. So I think that those, and if they're serious about getting out of these trades, and some of them might be serious due to compliance or whatever, you know, some of these hedge funds are pretty strict rules. You can't just take a loss like this, maybe. They may have to wait for this to, or even some market makers might be involved, even force this to get back up here to get out, really. All the retail traders will be getting long again if we do that, and they will be providing the exit liquidity for those who are trapped at the top in order to just sell into and drive this further down. I think gold's got a good chance of getting back all the way down to the breakout triangle. In fact, I expect that more than hope for it, although I am short. But if we do get back down there, that'll be the best place for me to reload my gold longs, and that will be all the way back down at 3,500, thereabouts. Notice also the 200-day moving average, the purple line where my mouse cursor is pointing, will be roughly at the same price at the same time if we drop down following that sort of gradient. So that would be the place, 3,500 for gold. Don't expect that this is going to keep on moving up. Gold often does these dirty traps after a big rally, and it can take a month, 3 months, 6 months, a year, or even 2 years before we make a new all-time high on gold. So just be careful. I'm not saying we won't do that or that it's not possible or even that it's not likely. We could do it. We could move up through these levels that I've got drawn in here and just move on up. It's not impossible to believe that. It's also not impossible to believe that we won't revisit these levels and that we'll just move back down from where we're currently trading down to 3.5. So yeah, I'm remaining short on that one. And silver too, I think has a chance of doing something similar. I've got 3 trend lines drawn in here, 1, 2, and 3. We've got down to, well, we've broken number 1. I want us to get to number 2. We are below the 20-period moving average here on this chart. Gold is not. That's important to note. There's gold on the left, above its 20. Here's silver on the right, below its 20. So silver is definitely weaker than gold at the moment. And if we don't follow my black arrow, which I think is possible, and we break trend line number 2, then I think we're going down to trend line number 3, and probably actually this breakout level. If I draw and clone this line and drag it down to that breakout level, that roughly coincides with where gold broke out, and I think we could get back down there. That's the 200-period moving average, the purple line in that vicinity too. So that's gold and silver, short until we're not. We could be wrong anytime. These both have the potential to blast up higher, if not just to the 786 here on gold at about 4,300. We could just move on and go on to new all-time highs. I've got no trade on platinum, although we were short. We've taken profit on that one too. Now, going across to Bitcoin. Maybe before we get to Bitcoin, let's stick with Bitcoin whilst we're talking about risk assets, and we'll come across to energies straight after that. Before that, I'm going to go and have a look at the comments again and drink a sip of Red Bull and have a breather because I've been talking for 20 minutes nonstop. All right, how's everyone doing? It's good to have everyone here. Right, let's carry on. Now, Bitcoin. Everyone said that we were going down, and I thought we might too, but we didn't. And I still think we could do. We're back up at the red line at 114,000, a pretty key level, and holding really well. That could be a fake clear out through the bottom. Bitcoin likes to do this all the time. I'm talking about the move down here at the end of the chart. Look how often Bitcoin likes to do it. There's one just a little while back. There's another one a little further back. There's another one a little further back, and so on and so on. There's one over there. And wherever you look on Bitcoin, you're going to find these fake breaks down to the bottom. Maybe not since those other ones anyway, but it's what Bitcoin likes to do. And I think it's possible and probable even now at this point that we have now formed the bottom here on Bitcoin. We've also broken out of what looks like a bull flag. We had a false start originally, that big hump or heap or spike up. It was a false start. We fell back down after creating a massive CME gap, which had to be filled. And we came back and we actually got so much momentum back down to the bottom side that, have I left something awful on the chart? No, I haven't. So much momentum to the bottom side that we actually just carried on, broke through the bottom. And of course, we had those big liquidation events that cleared out like $40 billion. Was it 20 or 40? I can't remember. Still a lot of money of Bitcoin or crypto in general, particularly in the altcoin arena. So yeah, are we out of the blue, out of the clear? I mean, are we in the clear? Do we have blue sky above us if we break up further and move above that high? I think we do. Just looking to the left, also, we came down to the previous all-time high, the black line in the center here. That was the previous all-time high before this next rally. We just came back down there, cleared out below there a little bit and bounced out. So I think it looks quite good. I will add another tranche onto my Bitcoin longs. I'm long from about average price now about 79. It's increased slightly from 74 because I've added more size here at slightly higher levels. I will add another tranche on at 18. 100 and where is it exactly? 118,300. I've got another 5% tranche to add on there, and then I've got another one at about 122,200 thereabouts. So I will add another 10% as we rally up through these levels. Notice this big green line in the center of your page. This is an important line because it's the long-term trend line going back to 2022. You could draw this line better. Actually, Crypto Paul, and you might be watching Paul, has got a similar trend line that we have not broken. But I'm going to just stick with my original, and it's the one that's up on X on Twitter, saying, I don't think this trend line will be broken again anytime soon. Well, we did break it. I haven't taken that tweet down. I've left it there. It's pinned at the top, just to show you that I'm quite often wrong. But now that we've broken it, can we reclaim it? That's the question. And the big trend line is in confluence with the, let me just check these moving average. That's the 20 and the 100 period moving average here on this day chart. And so we've got a lot of traffic. Plus, if I put on the volume trace on the right-hand side, if I could just find the correct one, volume, I'm going to show you that we're also, hang on, volume, symbol search. No, we want indicators. Volume, sorry about that. It is late on it. Well, it's not late. I want the volume for the session, not the session. Yeah, the session, that'll do. Relative at the time. Let's go with session. Session volume profile. I don't think that's going to work, actually. No, it's not going to work. Anyway, it doesn't matter. I can't find it, but it's there. But on the right-hand side here, you'll see that the big volume hump that we've got to get through is at around about 116,000-ish. Well, I think it's about 118,000 actually. So I think we're just over the other side of that. I haven't got it. I've got it on my other charts, but we'll talk about that later if more questions come up about that. But yeah, so a little bit more. So I'll have extra 10% on, and then I'll add some more on once we break and close above this recent all-time high at about 127. Targets for Bitcoin, they're all drawn in here. These are all just fib extensions. So please feel free to pause this video. Let's see if there's any more further than that. No, there aren't. So feel free to pause the video and write these levels down. And I think the big orange level at the top here is my favorite for this year, actually, at about 175 to 180. That's the 2.618 fib. But at the very least, I think we'll get to the 1.618 at around 152,000. And then these ones I just see as traffic that we've got to get through just above there before we break out into freer space out of the tightly packed Fibonacci extensions. So yeah, pretty excited about that. And I think it's moving up nicely. A bit of a pullback right now. Let's go to the 15-minute chart. You can see we're just dipping down a wee bit. There's the session volume profile. That's what I was looking for, but not that one. I'm going to remove it. So yeah, just dripping down a bit. This is the 15-minute chart. If you want to look for exits, folks, and just as a general rule of thumb, a long-term exit would be perhaps a close below the 50-day moving average. But if you're trading this on an hour chart, let's say, you might look at the 50-hour moving average, the red line. Or if you're trading it on a 15-minute chart, you might look at the red line there too. That's the 50-period moving average on the 15-minute chart. But yeah, it looks good. I'm happy with Bitcoin. And I think as this moves up, you can see Ethereum, XRP, Sol, all getting a little bit of a tick up at the same time, particularly XRP looking good. We're still below the 50-period on Ethereum, XRP, Solana. In fact, all of them are below the 50 period. So, still relatively weak, but we are trying to reach up into them. So I've also got a whole bunch of other coins on a Kraken wallet that are not reflected here. My strategy generally is I've got a tiny little bit of leverage on Bitcoin now, but no more than 1.1. And I've got these other coins which may do better and go faster. And we might get a 5x, none of these coins, but on some of the smaller coins. And then some of these will go faster as well, these other altcoins. And my idea is to dump it all into Bitcoin by the end of the year at some point, by the time this rally all ends. But I won't be selling my Bitcoin. I'll just be putting that into cold storage. So my strategy, and it's pretty basic and simple, is to occasionally buy altcoins seasonally or at any other time when there might be a bit of a bid underneath some of them. And get out of them as quickly as possible and put that money into Bitcoin on a trading wallet or a soft wallet, online wallet. Trade it a little bit there until it's ready to go, and then put it all into my cold wallet. And there it stays. It never comes out of there unless I need to spend it or do something with it. So that's it. Pretty good. But we'll have to find out whether this rally is sustainable. Remember, this is a weekend, and I must remind you, let's go back to the Bitcoin chart. I'm going to put on here the Bitcoin CME chart, and I want to remind you where we finished last week. We closed at 110,727, right? And we're now trading at much higher, and so we've created a gap. I'm just going to get my Black Bull chart up here, and so we've created a CME gap between the close price from Friday at about 110-ish, was it 109, around about 110, and 113.5 we're currently trading at. And so we may have to come back next week just to close that CME gap, which will open up when the markets open, when they're open a bit later on. So bear in mind that candle, today's candle, might have to be retraced completely before we move up. So don't start adding massive size on any of your Bitcoin trades or plays until we see how we deal with the CME gap, which may need to be filled. All right, so that's Bitcoin and the other alts. Now let's go on to energies and natural gas. Now the market opens in a couple of hours' time. In fact, more than that, in about 6 hours' time. And I'm now trading the natural gas futures contract again. It only rolls over next week on Wednesday. Well, this coming week, Wednesday, the natural gas futures contract at the Henry Hub rolls over. Let's have a look at that quickly just to set the scene. So I'm going to go to the Henry Hub chart. And this is something that you can all do if you've got TradingView. These prices are delayed by 15 minutes on the TradingView chart. And you look for NG, Henry Hub Natural Gas Futures, NYMEX. That's what we're looking for. And you'll notice that the price is much lower. Let's go to the day chart. Trading at $3.30, whereas the futures roll over the next contract. And here it rolls over. You can see it on the same chart. We switch on Wednesday, the 29th. That's this coming Wednesday, from the November contract into the December contract. The November contract is currently trading at $3.30, where we closed on Friday, whereas the December contract is trading much higher. I can't remember, around $4. We'll come back to that shortly. So bear in mind that we have not rolled over into the December contract yet at the Henry Hub futures exchange, but some brokers will have already rolled over into the next month's, the front month's contract, the following month's contract. And so my broker has done that already. Let's go back there. So I'm trading the December contract, not the November contract. So I'm going to go back to my broker, Black Bull Markets, and there is a link on my website if you'd like to trade with Black Bull. I'm an affiliate of theirs, and so I'd be very pleased if you joined up with Black Bull Markets using my link. I get a little, it doesn't cost you anything, I get a little commission. And talking about commission, please make sure to like and subscribe while you're here, while we're talking about natural gas. If you like natural gas, if you like gold, silver, WTI oil, and stocks and crypto, make sure to hit the like button and subscribe to the channel. Otherwise, you might miss out on some stuff that you enjoy. I'm going to go to the 4-hour chart here. There's the rollover gap. So we're in the new contract here at the top. I put a big blob around the contract. So there's the previous contract. I'm going to take these blobs away now. And we're into the new contract now, trading at a higher price. Let's get rid of, well, let's leave them there. I'll leave them there. Why not? So this is the new contract. I went short on the open. The moment that I had the chance, I got short on the rollover at my broker, and I'm still short. We're back almost at the price that I sold at. So with the last 4-hour candle on Friday, quite bullish. Overall, I think we need to pull back a bit on natural gas. And I think we've got a chance of just pulling back maybe 10, 15, possibly even 20 cents back down to gather some more liquidity for the next move up. I think, however, that this is a dangerous play and it's now counter trend, although I do like to try and sell natural gas at high prices because it's a ranged instrument and we often trade between 350 and 250, and we stay in those sorts of ranges for a very long period, and we're at the top of what I think is a new range between $3 and $4 for the next number of months or even years. And so we're trading quite close to the top, kind of in the middle. I think we could pull back. It's overbought on many of the oscillators and indicators, so that's the only reason. I do want to get long on this again, and as soon as if we do dip down and reverse, I'll go to the 4-hour charts and start looking for reversal candles and patterns. That's normally when I trade at the end of the 4-hour candles. And we've traded this pretty well. I got long on the previous contract at 289. We rode this all the way up to the top, and now we're short. So it's not a matter of me thinking that natural gas is a weak instrument not worth holding on to. I still feel pretty bullish about it, but I just want this to pull back, bearing in mind it is this ranged instrument and it likes to trap people to the top side and to the bottom side. I've got some arrows on here indicating where I think we could get to. We're halfway there already. So, most of the moves, well, half of it's over already. We've got most of the volume underneath us now, which means that we may be able to push up quite easily through this thinly traded zone on the right-hand side. We'll have to see what happens. But I do think we could get a little bit of a drop out of this point of control zone that we're currently at, back down into the higher volume zones down below us. So I'm short for now, looking to get long on a dip. I don't know how far down we could get. I'm thinking 10, maybe 15 cents, and then looking for a reversal. We're currently trading at $4, so that would mean around about 390 to about 380. Probably 80 is better. And then, so that's it. And then on crude oil, I'm short as well, actually. I'm normally short on crude, and I'm now short after having been long from the bottom. We've reversed. We got long down here. You might remember this from last Sunday. So actually, that was last Sunday, more or less. I think it was on the weekend. That was Tuesday. No, it was Tuesday. We were there in this triangle last Sunday. Anyway, we got long, switched direction here at the 50-day moving average on WTI. My overall idea is that we're still short on WTI, whereas I have a long bias for natural gas. I think WTI will eventually need to move lower, but it's going to be a bit messy. And I think we are going to be trading in a pretty much like we've been trading most of this last couple of years, dribbling down, but with a zigzag spurted up and spurted back down by various news pieces from OPEC and Russia, tariff news, Russia recently getting whacked with more sanctions and tariffs, which drove the price of oil back up, like we saw just the other day, right back up to Moab, the shorting area that I think is the shorting area. And so it's a great place for me to get short. We had a bit of a nice reversal candle. Let's have a look at the 4-hour chart, and you can see, looks pretty decent at the top here for a short. So that's WTI. And basically, I think what Donald Trump did by creating havoc with the Russians and OPEC with sanctions and so on just drove the price of oil up, which is exactly what Vladimir Putin actually wanted. So, yeah, I'm not sure if that was the greatest play by the Trump administration. But anyway, maybe there are deeper plans that we don't know about. And that's it, folks. And then a couple of other things. We were talking about grains, softs and grains, and I'm going to finish this off. As I was saying, we could have this sort of inflationary bubble going on where we're rushing into assets, riskier assets, and perhaps a further currency devaluation in general, not necessarily just the dollar against other currencies, but all of the currencies dropping against gold, silver, soybeans, cotton, corn, wheat, stocks. As those prices rally, it is basically reflecting a decrease in the value of the dollar or the pound or the euro or the yen or the Canadian dollar or the Aussie dollar. They're all dropping as prices rise, not necessarily because things are worth more, but because the currencies are worth less. And I think that could drive some of these up as well. And so we have one short actually, and that's on coffee. I've got short on coffee. I have some very avid coffee traders in my group, including Magdalena, local coffee fundi, as a good word to use, an Arabic word which is also used in East Africa, means expert or enthusiast. And so we're short again. We've been short every time we've reached the top, and we've just sold here. And we got to the 78.6% Fibonacci retracement of this little move down, back up there. We sold at the 786. Bit of a scare with that spike up the next day, but moving down quite sharply. But that's the only one that we're short on. And I'm also I'm long on sugar. I'm long on wheat. Sugar doesn't look great, but it might hold. I don't know. At some point, this is going to come out of here. It's just going to happen. When, I don't know. And I'm holding a bit of a bag here. This is a reasonably sized position, a little bit out of the money, but I'm also long on wheat. This is in the profits now, quite nicely. Triple bottom here at the channel-ish bottom. Looks like a falling wedge. I expected we could get a little bit lower, but we haven't, thankfully. We've bounced out of there. My long positions are from roughly in the zone at the bottom here. I'm hoping for a breakout through the triangle and then a continuation of this move. After a retest, a breakout, something like that. These should be green, of course, and a retest of the channel, something like that. And then I've got another, I do have a green one actually on this page, which is you can look at, and I think we'll follow. I suppose we may not get down as low as that, but if we follow, we'll probably get up to somewhere around, I don't know, 750, 800, something like that on wheat. Same with cotton and corn. I think we're long on corn. That was a good one. And cotton as well, also good. Bouncing out there with a big double bottom. All of these look quite good. That's wheat. We just talked about that. And then cotton as well. I really like this pattern too. Holding the line, literally holding the line very, very, very staunchly. I'm hoping that we'll follow the green line. A big double bottom there on cotton. I kind of like that one too. Corn we talked about, and so on. The other one is lithium. It's not meant to be on this page, but I had nowhere else to put it. I'm looking to get long on lithium again. We were long from quite low down. We got out near the blob. I was hoping for a pullback. We didn't get the pullback, and we got left behind. I didn't get the rest of the move up. So we could have got long again on that big dip down, but I missed even on that little pullback into the gap. Could have got long there, but it didn't look great, did it? When we gapped up, I should have got long again. Didn't do that. Anyway, and the other one is uranium. We talked about some of these energy plays. Uranium is another one. I'm short on uranium currently, but I think at some point we're slightly out of the money again on these two positions. I think I was hoping for a deeper pullback. Uranium tends to trap people at the top. It's done it multiple times before. We've had this most enormous rally. There's plenty of space to go. Don't think that this is has got nowhere to go, though. This is uranium, and many people don't zoom out on this chart. This is going back to 2011, and we were as high as $130. We're only trading at like 50 something right now. There's loads of space for this to go up if it wants to. It does look like a U-shaped bottom, and it does look like it's about to exponate. That's not a word, but I think you know what it means. Exponate out of there. So yeah, super interesting. And folks, I think I've basically covered all of the markets. So I must now go back to the questions and see if I've skipped anything. We have not talked about Tesla and MSTR. Thank you, Emil. Let's talk about those. Let me just flash that up here. So Tesla and MSTR, we didn't talk about any of these stock names actually. So I like these names at the bottom, all of these names very much, and I'm going to be putting some more money into these. MSTR, I'm a little under the, that position's closed long ago. Let me just show you what positions are still open. I think these last three, yeah, last three positions still open. Still trying to find a bottom on MSTR here. I don't have a full size trade. I want to add some more. I think this bottom will hold, this triple bottom here, like it did on many of the instruments at the same time, including Tesla too. MSTR, I think we're going to try and hold here, right here. And in pre-market, I wouldn't be surprised if we're back right at about at least above 300, probably 305, or maybe even 310, following that big rally in Bitcoin. So we'll find out soon enough when the markets open up. Tesla, similar sort of thing, big triple bottom quite a long time ago, and then another sort of triple bottom here in this triangle. We have not revisited this triangle yet, and you can see all my sort of projections. I thought we might get back down. We have not done that, and we're in this sort of island with a gap underneath the island. There's a danger that we could gap down, make this an island reversal, bring us all the way back down to the triangle, which I think is probably not all that unlikely actually, and then bounce out of there, as I've suggested by my arrows. But with a bit of luck, we won't have to do that. We do have two gaps below us though, one there and one there, both unfilled. And actually we've got another one even further down inside the triangle. So three gaps below us on Tesla, and not looking particularly bullish at the top here. And Friday sold off a bit. I don't know, we might just gap up, or we might just gap down, or do nothing overnight in the pre-market. We'll see. Coinbase also depended on crypto, but Coinbase I kind of like because it's like one of those wheelbarrow shovel type plays in a market like the gold rush. If this is like digital gold, Coinbase is the shovel or the wheelbarrow or the pick or the bank vault that you put the stuff in, whatever it might be, going back to the Wild West. That's what Coinbase is, and that's normally the folks that make the most money. So just for that reason, I think any of these exchanges, the good ones, Coinbase might not be the best one, I don't know. There are loads of them, but the good ones, I think, will weed out the poorer ones. The weaker ones will fall by the wayside, and the ones that we pick, the good ones, if we pick the correct ones, will go on to make us a lot of money. I think Coinbase might be one of them. Of course, there are loads of others. And then NVIDIA, I think we've got to keep focusing on these chip names. NVIDIA, despite all the naysayers and the idea that this was, you can see my green breakout triangle, and what I thought would happen, I was actually short on NVIDIA for a while. We did get a little bit of profit on the short, but it didn't last long, and then it bounced out of here. Just filled that little gap, moving up. I'm long on NVIDIA now too, and I'm hoping for that to move up. There's loads of space above here too. In fact, if we look at NVIDIA and just draw some projections, it's almost impossible to, it looks like Bitcoin really. And even, let's put this on a log scale. Can I do that? Yeah. So yeah, it just looks pretty solid to me. Moving up, moving up, moving up. And yeah, rounded top maybe. Is it the start of a head and shoulders, something like that? I don't know. But I think unless this starts to dramatically weaken below its 20-week moving average, and even the 20-day moving average, which is, we're trading just above it at the moment, the 50, the 100, 200. As long as we hold all the moving averages, I think we'll be okay on NVIDIA too. So these are all my favorite plays, folks. My biggest excitement in these markets at the moment are, crypto and some of these stock names, particularly the chip names, the indices, and some of these the mining names and the Bitcoin type names, crypto names. So, and I think, Tesla, MSTR, Coinbase, NVIDIA, they're all part of the same gang, and I think they'll all move along together. And I'm going along for that ride, I hope. I always get your name incorrectly said. Cheersek, I think it is. I'm going to get some more picture on me. There we go. All right, now, thanks for your detailed answers. If you want James to look at specific instruments or charts, drop your questions in the chat. Thank you, Emily Trading. Appreciate it. Emily is part of our team here at ArcisFX. Very fantastic member of our team who looks after our clients and helps in our marketing areas, and actually also a trader. So good day. That's from Emily. I was going to say hello, Emil. Omkar, when do we consider a script as bullish or bearish with respect to moving averages? Above it is bullish, Omkar. Below it is bearish. And I would go with the simple moving averages, 20, 50, 100, 200. And they vary in order of importance by the length of their period. So the 20 is a short-term moving average, which will get broken often. The 50 is a medium-term, very, very good moving average. Above that, we're bullish. Below that, we're bearish in simple terms. There are obviously lots of nuances, lots of different ways you can use moving averages. I don't use them as crossovers ever. I don't consider moving average crossovers to be reliable or very useful, but I use them as support and resistance levels. I don't look at golden crosses, death crosses, 5, 13 EMA crosses, no crosses. I just use them purely as support and resistance. All right. I hope that helped, Omkar. All right. Learn to earn. Have a nice week ahead, James. This is Somnath. Nice to see you, Somnath. That's it. All right. I think I'm missing out on some questions here because I scrolled down too quickly. We've got about 15 minutes left, folks. So continue to put your questions up. All right. There we go. That was that one. That was that one. Omkar, ask me further if you have further questions about it. A Quasimodo pattern that was spotted on natural gas chart. I don't know much about the Quasimodo pattern. One of our previous members told me about it and showed me it. It's basically a failed head and shoulders pattern. We did talk about it last week in the Ola Prime streams. Not qualified to talk about it much more than I did apart from that, but I will do some research on it, the Quasimodo pattern. You can do your own research. Go to investopedia.com or barchart.com or just Google it or put it into ChatGPT or Grok or anything like that, the Quasimodo pattern. And I'll show you how to spell it too. Can you explain how to use it? That's how you spell it. QA, etc., etc. Go and Google it. All right, Omkar, if you're trading on a 1 hour or 4 hour time frame, usually, when do we consider a script as bullish or bearish with respect to moving averages? Yeah, same thing, Omkar. Doesn't matter what chart you're looking at. If you're trading off a 5 or a 4 hour chart, 5 minute chart, 4 hour chart, 5 day chart, the moving averages I use as support and resistance in exactly the same way on all the charts. The 20 is the short term, 50 is a solid one, medium term moving average. Above it's bullish, below it's bearish, and it can act as a support line or a resistance line depending on the direction that you approach it from. And also, I don't use the crossovers, as I said, and it's best to use them when they're in confluence with, let's say, a Fibonacci extension level or some other indicator on your chart that's giving you a flash at the same time. If the price is bouncing off or is around or moving towards one of those moving averages, you can make decisions based on that. So I hope that answered that. Quasimodo, we talked about that. Let's carry on. How far do you think coffee can fall? Okay, Omkar, how far? Well, I could fall to 0, of course, like anything could. If everyone decided that coffee was horrible and no one wants to drink it anymore, it would drop to 0, or maybe it has other utilities. But I think just basically back down to the bottom of the range, and that's at 280. But I think that's just the start. And I think we're going to faff around in this very, very large range between, it's almost like a 50% range from 480 to 280, massive range. So it's going to take time to get out of here. We will eventually get to the bottom of the range, I think. We've also got a channel running up in the middle here. Let me make this larger for you, or brighter, so you can see it better. A bit of a channel running up the middle. Well, that's too bright. That we could, get to the bottom of that channel. Channel's not quite accurate still, but overall, I think we could get a lot lower, and I think we'll be aiming for around about 200, maybe below 200. But we're currently trading at 380, so long way down, I think. But let's start with about 280 to 300, 320 maybe, within that very large range. So that's coffee. Good day, Andreas. And Andreas is saying hello to you, Ole. What do I think about URA? Martin, we covered URA. I hope that was useful. I think we could fall further, sure, but it's looking supported quite well at the moment. So perhaps we might have to change our direction on that. Have a nice week ahead, Somnath. You too. Thank you very much. You'll catch up later. Thanks, Marcin. Make sure you watch every minute. I'll be watching you, watching me. Haha, says CS Tech. MD, ETH. Let's look at MD. Let's look at ETH, MD, quickly. Yeah, ETH. I kind of like ETH as well. I don't buy all the hype about ETH and CZ stuff, and I'm surprised that he got pardoned too. But ETH is also trading within a channel. It didn't blow out through the top like Bitcoin did as much. Remember, the Bitcoin chart went boom massively through the top. ETH didn't keep up with it, so we saw Bitcoin dominance surging. The alts didn't do that big rally, but they didn't, they've dropped back down again, and ETH is right back down, came back down to the channel bottom after that sell-off, and didn't actually even fall further, even though Bitcoin did. Bitcoin fell another load. I think I thought we could get down to the 200-period moving average. Once we got there, I thought we might have to get further down and bounce out like that. It could still happen, of course, but we didn't. We held that line quite well, and we're above the channel center line, but we are below the 20, the 50, and the 100-period moving averages, and the top channel line, and these highs. Now, looking at the bigger picture on ETH, you'll see there's a big purple line that I've drawn from that previous all-time high that we actually matched recently, matched it, touched it, and fell back down. But we broke out of that very shallow, let's see if it's actually a channel too. Very shallow. Well, it's not a channel. Maybe. Yeah, it's a bit of a channel, actually. So, yeah, so we broke up through that channel line, and lo and behold, we held it. So I think ETH looks pretty bullish. This is the weekly chart on ETH, and I don't see any real danger on this chart. Loads of wick lows on the weekly chart, not breaking the channel, not breaking the 20-week moving average, not getting down to the 100 and the 50, and also holding the channel outside, above the channel top. Bit of a funny channel, sure, but I'll take it. I'll call that a channel. And we're above it now, and on the weekly chart, it looks very, very constructive. I like Ethereum very much. I'm still long on Ethereum. I'm still long on XRP, and I'm still long on Solana. I'm also long on all of these at the bottom: Cardano, ADA, Uni, Litecoin, and Link. Those have not moved much today, but I suppose they will catch up if Bitcoin keeps on moving and drags the rest of them up. So there we go. Is there any hedging strategy of natural gas? Yes, I hedge all the time, but not today. I'm still short, but if we do start moving up a little bit higher, I will consider hedging my natural gas trade. And the difference between the two monthly contracts is already dealt with through the rollover, and it's also built into the continuous price through the contango adjustments as we approach the end of the month, which is next week. The rollover is on Wednesday, and you'll see the continuous price begin to adjust higher as those chunks are added on to the continuous price continuously. So no hedging at the moment. I'm happy with my shorts so far. Cheersec, Gingy from Shrek. Yeah, all right. Do I trade other stock names? Yes, I trade loads of stock names, Lucky. I trade mostly the tech names, mostly. TC says, I think if the trade deal with China goes through, metals will come down. That's a good point, TC. And Trump needs to keep his mouth shut. Yeah. Yeah, a very good point. We could see a slump off in metals prices too. Andreas, Images, Willig, hello. A little bit late and missed your opinion for natural gas. Could you speak 1 minute about your opinion? Yeah, I'm short, Andreas. I'm not going to repeat myself. We don't have time. I've been speaking for an hour already, but please rewind the video. But I remain short, target about 375. So sorry for being obstinate about that, but I have certain rules. And one of them is I don't repeat. If you're late, you're late. You have to catch up. So that's the rule. I can't break the rules because I made them, but I can't break them. So folks, have a wonderful evening. We've spent about almost an hour here. If you've got further, we can spend a few more minutes if you want, and cover some of the instruments that we haven't talked about. But I think we've covered basically everything. It's lovely to have everyone here. And I'm very pleased that you've made your time on a Sunday evening to attend the stream. There will be a live stream on Wednesday for members only. So if you're not part of the ArcisFX private trading group, please consider joining. It's not expensive. And all my trades, every single one of them is posted up in the live trading room on a secure Slack server. So there are no imposters in there. And you'll see every single trade I take personally. It's not a trade signal service, but I tell you what I'm doing, and you can make with that whatever you want to do. But I post up every trade, entry, adjustment, and exit. And I also do a Wednesday video for members, which you can get hold of. The other way you can get the Wednesday videos by just joining this YouTube channel for much less money. You'll just get the Wednesday videos. You won't get the private group access, but for $1 or $2, you can get my Wednesday videos and the other private videos that Crypto Paul does for us. I must mention Crypto Paul. Crypto Paul is our crypto trading expert who's joined us here at ArcisFX, and he's on regularly throughout the week. So make sure to subscribe. If you're into trading crypto, we've got one of the best crypto traders around, commandeered to our channel. So Paul is a familiar face amongst many here already, but if you've not met Paul, make sure to join, subscribe, join the private group if you'd like to get our trades, and make sure to join this channel. There's a join button below where it says subscribe. Subscribe first, then join, then hit the like button. That's the sequence, okay? So it's been great to have everyone here, and I think that's it. I'm just going to quickly go back to the crypto charts, and I want to see what's going on as we wrap up. We'll go back to Bitcoin. I'm going to have a look at this on a very short-term chart. Let's go to the 5-minute chart and see what the behavior is. So this is what happened today, folks. This is the big breakout, and I remember this happening because I was at a restaurant this morning, and I was watching this on my phone, and at 11:20. So it was just before lunch. We were having a couple of snacks, some Greek meze or something like that, I think. And we had this big rally, held it, secondary rally. We're holding it, and I'm guessing we're going to get the tertiary rally next. And that could take us above 114,000. That will put me into a better frame of mind if we can clear. My mouth's getting dry and fuzzy now. If we can clear that level and hold it, the red line right there, with a 100 period moving average and the 50 period moving average is, if we can clear that level at 114, call it 400, and hold above there, and ideally clear above that trend line, this green line in the middle, that might need a little bit extra. And that's why I've got my order set just above 118,000, which is also the point of control and the big volume zone created by this multi-month consolidation here at the top during July, August, and September. So far, so good. Going back to the 5-minute chart, it's not drooping down, it's not collapsing, it's holding all of those gains, which started at 11:20 my time this morning. We've not looked back, we've hardly dipped down, it's looking pretty strong. But remember, we have a CME gap below us for the weekend. Let's go back to the Bitcoin chart. Let me give you an exact number for that. For the CME gap levels, we don't want Black Bull, Bitcoin. And let's go to the CME futures chart. And you can see the exit price or the close price on Friday was at 110,690. 110,690. And I'm going back to my current chart, Black Bull. And we're at 113,550 right now. So I'm going to draw a line at 110,990 and just leave it there to remind myself, where are those lines? To remind myself of where that CME gap starts. 110, is that right? 990. Yeah. So that black line there is the line that we may have to revisit. When as soon as we roll over, in the next few hours or days before we move on higher. That's the CME gap level that we might have to just revisit. And that's it, folks. I'm going to just quickly go back to, that chart's fine. I just realized I've shown you these charts on a diminished screen. Doesn't matter. You get the idea. 110,900-ish is the CME gap. All right. And I'm just going to say goodbye to everyone. It's fantastic being with you all. Andreas, you missed, we talked about that. just catch up, Andreas. It's right. It's sort of halfway through the video. TC is a member. Definitely join, guys. TC is part of our private group. Thanks, TC, for the advert. Appreciate that. Andreas, thanks for understanding, mate. And Martin, see you at the opening. Thank you for the great overview. Yeah, private group members, I will see you at the opening in a few hours' time in the Slack. So if you want to know what I'm doing with natural gas and crypto trades, and of course the opening for the stock market, I will be with you a little bit later on in the private group. I'll see you a bit later there. And if you're not part of my private group and you want to get hold of all this info at the market open, come and join. There's a link below. Emily, it's great to have you here too, and see you soon. All right, everyone, take care. Have a great evening. Enjoy the rest of you, what's left of the weekend, and take a few hours off now before the markets open. Spend some time with your family, have a nice meal, go for a walk on the beach, depending on the time of the day, and get your mind in the right place. Get the FOMO, get the fear, get the greed, the doubt, your self-doubt. If you think you're not very good at trading, get that out of your mind. If you think that you're really, really good at trading, but you're not, get that out of your mind. If you're worried about the market open, get that out of your mind. If you're overexcited, get that out. Get into a Zen state. Let's approach this next 3 months with great excitement and stability, calmness, peacefulness. There's loads of money to be made in the next 3 months, folks. And I promise you, if you'd like to be part of that, a great place to be part of that is in our private group. And there are lots of other places you could be too, of course. It's not just us. There are lots of good traders around. If you want to be part of a winning and successful trading group, you know where to go. Take care, everyone. Speak to you soon. Have a great trading week ahead of you. I'll speak to you on Wednesday, private group members. Take care.